Okay, so today we're going to discuss the future of institutional grade custody. I think it's a very key panel because custody is really the missing link to having adoption by institutions globally. So we have on the panel three experts in the field, and I'll let them introduce themselves. Taka?
Yep. Hello. Thank you very much for your audience. My name is Takatoshi. You could call me Taka for short. Head the sales for APAC for Copper. Copper is an institutional custodian. We've tried to provide custody in its true nature where we have our clients' assets sit within secure custody and provide them with the access to exchanges, OTC trades, staking, DeFi connectivity as well. And that is one core part of our business, but we have another business line where we license our technology to companies like State Street, and we team up with them and provide them with the business knowledge that we built up over the 5 years for them to start their own digital asset custody business.
Irfan?
That's a good lead in. So my name is Irfan Ahmad. I'm the APAC product lead for the newest division at State Street. State Street, if you don't know, is a 230-year-old asset servicing institution, and we are a one-year-old inside of a 230-year-old organization. So, as Taka mentioned, we partner with a number of different firms in the industry in order to be able to bring those capabilities to our traditional asset managers and asset owner clients. My role is to provide product and strategy across the State Street digital division in Asia Pacific, and I'm based in Singapore. So just a short commute from me, just across the road.
Awesome. Dan? Oh.
Better, thank you. Dan Sleep, Northern Trust. Northern Trust is a custodian at heart, asset servicing provider. US-based, not quite as old as State Street, but nearly 140 years as well. I operate in the innovation space likewise. We rebranded in May this year as Digital Assets and Financial Markets. What that means and what I do in region across Asia Pacific is largely engagement with the innovation digital domain across numerous territories in relation to market infrastructure, new future technologies, operating models, looking at future opportunities and positioning for Northern Trust in our businesses. Also based in Singapore.
Awesome. Thank you. Thank you, guys. So I think the first question is really about why custody? What's the pain point that those guys are solving? So Taka, please let us know how custody is really bringing instos in the field and how this has changed over the years.
Yeah. So for institutional investors, when they want to invest in the crypto space, if you look at the infrastructure that they have now, you have exchanges that takes care of not only the trades, but the custody element, the trade settlement elements, the potentially even the prime brokerage element as well. So everything's very concentrated in one exchange, and there's a huge counterparty risk. You have probably heard a lot of exchanges during this downtime or bear market that had withdrawal suspensions. I myself had my personal assets all taken by exchanges as well. I mean, this happens quite often as an industry. If institutional investors want to come into this space, they don't want to take all this counterparty risk at the exchange. We need to have segregation of duties of all these elements that I just described. You want to have custodians, you want to have trade settlement separate, you want to have prime brokerage separate. So what we're trying to provide at Copper is bringing those elements away from the exchanges and providing that type of environment so that institutional investors come into this space with a familiar infrastructure that they're used to trade this new type of digital asset.
Very interesting. So I think that you make the case of what custody is solving for, right? And how it's the missing link between the exchanges and instos coming in. So now we know why, but now what's actually the profitability and the market size? So I want to turn over to Irfan and Dan here to tell us what their firms think this market is worth, and maybe what are the prospects? Irfan, you want to start?
Yeah, so maybe I can start, but Dan, I'm sure, will be able to chime in with a few extra thoughts as well that I might not have been able to think of. But in terms of the market itself, beyond cryptocurrency, so cryptocurrency market cap fluctuates anywhere between $1 and $3 trillion depending on how buoyant Bitcoin and Ether are at the moment. So for us, that's one segment of the market that we can't really ignore, but we think that there's a potential for assets to be digitally native and tokenized in the future. And so for us, we see the spectrum of digital assets ranging from things like cryptocurrencies, security tokens, NFTs, central bank digital currencies, and everything else in between. So firstly, if we define digital assets like that, I mean, the possibilities as far as market size is concerned in terms of the future is pretty wonderful in terms of how and what might be digitally native in the future. In terms of the types of services that we think are going to be relevant in the future, that is also an interesting question and a philosophical debate that we have internally. What does custody look like in the future? Is it going to be the same? Is it even referred to as custody? For us, the word custody in traditional sense has been an evolving term for 30, 40, even 50 years. As far as custody of assets is concerned for digital assets, the mechanisms and the security models that are put in place in order to be able to provide those services are holistically different. So if you speak to any global custodian today and you ask them to provide services, safekeeping services for digital assets, it's the equivalent of asking a fish how to juggle. So this doesn't necessarily come naturally to, I guess, traditional custodians. What we have to think about is what services and what infrastructure is going to be required in order to be able to provide these types of services in the future. So by virtue of that, we work with partners such as Copper in order to be able to bring those capabilities to bear, in order to be able to have that same kind of experience that our clients have been used to, but then calibrating whatever solution they have and bringing it into a regulated institution such as ourselves, and then delivering that in a way that's meaningful. So just moving beyond safekeeping, there are other capabilities that we can bring to bear. So things like, as Tak had mentioned, staking, lending, borrowing, yield farming. There's a whole number of different things that could be brought to our institutional clients as well. And of course, those types of capabilities all start with this concept of safekeeping. So we think that the marketplace is huge. The opportunity is very vast. And the capability set is going to be incredibly varied.
Interesting. So it's not only like the what is digital assets, it's also like what services you provide across the board. Dan, I know you have maybe somewhat of a conservative estimate, which is actually pretty big. So
yeah, sure. So I guess I'll break it into two pieces. Just on the market size question, which you originally asked. So a lot of the thinking and strategizing we do internally, and then just projecting forward what that means for where we focus. One, our efforts. Two, our forward focus for business and the way that shapes. And then two, capital dollars, or three even. So we have a hypothesis that is based on 5 to 10% of assets will be digital by 2030. If you transpose that against our current something in the region of 15 trillion of assets as a business, it's a 1.2 trillion business based on current values. That's not insignificant, and that's enough of a catalyst for the top tier of our peer group, top of house, to be looking at this seriously. And it's not a wait and see type approach, because there's plenty of moving parts, plenty of incumbents that are making good strides and keeping us all on our toes. So that's from a market size perspective. It's real and it's getting traction. I echo and not go back into what Irfan said there, just in relation to digital assets are not equal, or not all equal, rather. I think they need to be put in the right buckets to be able to break it down and look at the opportunities and the threats that they possess. We, for example, have made a slightly different play in crypto custody. So we partnered in a VC with Standard Chartered in the form of Zodia. Again, that's outside the Northern Trust boundaries, and that's a very deliberate strategic decision for now, for multiple drivers. So we then look, and then coming to the next part of the way that you asked that question, we look at it on an ecosystem basis. There's a lot of that kind of positioning these days. Equally echo the safekeeping, custody connotations thereof. Custody to us is asset servicing more broadly. So we need to really distill down the value chain as it currently exists and see where we can play a role in that forward projected future. And akin to what Irfan alluded to in relation to staking, lending, these are all security services as they exist today. It will just be a transformational kind of stage to get to that future state. And linking back to some of what you heard on earlier panels, the concepts of DeFi pools and introduction of liquidity in a variety of more creative and innovative ways is absolutely the future for it. Elsewhere, and just coexistence, just to comment on the way that we see and co-manage innovation, digital asset activity and services alongside heritage, traditional securities. The way that we've structured our innovation business at present is aligned to do that. So we look at digital and traditional markets alongside one another. We manage them under the same network management function now. And it's really against the backdrop of our clients don't really care if it's digital. They just want access to the assets, the markets, and the alpha that goes with that. I'll pause with that before I speak too much.
Sure. No, that's super insightful. Thank you. I think we all are aware of the buy, build, partner model that strategists use to make decisions for their corporates. And I want to just continue on what you were saying around like what you've been doing with Zodia, and maybe then have Irfan explain like what State Street's view or strategy has been. So I think there's a slightly different strategy that both of your organizations have taken here.
Sure. Yeah, no worries. I can lead. So the buy, build, partner proposition is very real now more than ever, I'd say, for a bank such as ourselves. Reference the Zodia VC venture. I mean, that's been successful. Institutional grade servicing, partnering, strategic partners. Again, these are all things that you'll hear, and it will resonate with most of you in the room, I'm sure. These things and the ecosystem participation is at the forefront of everything we're doing. There's all sorts of sayings about going far and going alone and all those good things. I think that's pretty telling at this point in time. But yeah, we're very much on board with that. So we have a panel of strategic partners ourselves. Again, considerably deepening those ties in this current era for the purpose of that ecosystem development. And that's for the better of everyone. So again, partnering with regulators, infrastructures, to be able to make that a reality. And the value add that we can overlay into that can be multifold. So we look at it on a component basis where it relates to capability and our incremental development of capability. So again, in-house, we have a digital asset innovation platform where we largely incubate our new digital innovation endeavors. And that's, it's growing all the time. It's extensible capabilities that we can tokenize, we can track, we can do the provenance, all of these good things, assurance type functions that we anticipate will be required in those future state ecosystems. And we can deploy those into a number of different asset classes and contexts so far as clients and partners.
Yep. So that just leads me to asking Irfan, like, what about your partnership strategy, and why choose or maybe being chosen by, I don't know, Copper on your digital assets journey?
Well, I can't sort of share all of our trade secrets, but what I can do is just talk you through the mantra behind how we went about this. So we've been looking at this space now seriously for about 4 years. I'm looking at Sven, he's in the crowd as well. About 4 years. So he and I are, I guess, in banking terms, digital dinosaurs. So we've been looking at a number of different kind of so-called institutional grade solutions. So alongside Copper, there was an assessment of roughly about 200 or so institutional wallet providers in order to be able to get a better handle on what was out there, what was being kind of driven in terms of the market. Was this really retail-based or really truly institutional grade? What licenses those providers held, what kind of capabilities they were looking to build, what their roadmap looked like, assets under custody. There's a whole bunch of different things that we were looking at in terms of parameters. We then slimmed that further by security model choice. So we looked at the largest MPC providers out there, as we saw that's where the market...
You want to explain what MPC means?
Yes, sorry, acronyms. Multi-party computing. So it's a type of encryption that has existed for, I want to say, about 20 to 30 years. It's been used primarily within kind of intelligence agencies, so Interpol, the CIA, FBI. any secret service worth their salt have been using that type of encryption technology in order to be able to keep secrets and transfer secrets securely. So the use of MPC technology is relatively new to digital assets. That's saying something, given that digital assets as a domain is only about 14 years old, entering the teenage years. So interestingly enough, that type of technology in its application is somewhat new, but what we had seen is the market is moving towards that. That's not to say that the previous security models are defunct. Far from it. You have large multi-sig providers that are augmenting their offerings and doing different things. But for us, that really fit within our idea of safe and sound custody. So that was a consideration. Of course, Copper alongside some other MPC providers, we tested in parallel. And for our purposes and our configuration and the way in which we wanted to calibrate, Copper was a good fit. Copper was a good partner. And they have continued to be a good partner since we arrived and announced in March earlier this year of our licensing agreement. So yeah, I'd say that there's been a lot of research, white papers that I've written all over, annotated both with all my scribbles and Sven's scribbles as well. But I think that taking that consideration, as well as looking at the broader ecosystem in terms of the partners that we could look to leverage, and not looking at safekeeping just as a silo, has been incredibly important in terms of our approach to digital assets. And of course, you can't have trading without good safekeeping. The two are symbiotic. So going back to Taka's original point, decentralized services in a centralized model is kind of a bit of an oxymoron in terms. So it's important to make sure that whatever you have, you have this capability to be able to separate those functions apart from one another in order to be able to then provide safe and sound services going forward in the digital assets domain.
Interesting. So I guess Irfan mentioned how key and powerful Copper solution is. So maybe you can tell us more about it, and also tell us, in addition to that, how you guys are seeing your role alongside prime brokerage, which I think is maybe sometimes a confusion people have around what is the role of a custodian, what is the role of a prime broker.
Sure. So Copper's flagship product is called ClearLoop, which is a tech-enabled product where clients can leave assets within secure custody. We do a technical integration with exchanges whereby exchanges also leave funds with us. So we can deliver this DVP approach, the delivery versus payment approach, as opposed to reverse payments approach where the crypto industry is well aware of. So just to kind of give you a little bit more detail on that, crypto, you always have to send funds to an exchange, send funds to an OTC broker, send funds to a smart contract, etc. In the traditional world, obviously it's quite the opposite. So what we are trying to bring to this crypto infrastructure is how can we bring DVP into crypto? So this ClearLoop approach is exactly what we're trying to do. So as I mentioned, we do a technical integration whereby we have the client's assets, we have the exchange's balances, so we can, when the clients trade on exchanges, we can settle the trades inside Copper. So this concept permeates throughout the whole product. So we have integrations with OTC brokers as well, so that OTC brokers leave a balance with us. We can settle the OTC trades within Copper. We have staking process. We own the validator nodes ourselves, so clients can, from their secure custody, point their assets towards a validator nodes that we have and then stake their assets, so they don't have to send to an external staking pool. The DeFi connector that we have is also a browser extension that connects their custodial wallets to a smart contract on the DeFi platform. So not 100% DVP in that essence, but it's closest that we can get. So this is something that we believe is quite different from what the other custodial solutions are providing. And we can deliver more products on top of this because we have the custodial element. We have the trade settlement element inside Copper. We can then enable prime brokers to come into this space and provide their lending or other activities that they wish to provide for their customers. So towards the end of the year, we'll be launching a product where which is prime enabled, where prime brokers can come in, they can lend facilities into that custodial wallet. The lenders can basically lock their collateral inside their custodial wallets, and then through the Clear Loop solution, they can trade on exchanges without having to pre-fund them. So basically, from a lender's perspective, their lending facilities is within their custodial wallets. They can see the collateral that's there, and they're not taking any counterparty risk at the exchanges because those funds are not sitting on the exchanges. From the borrower side, the institutional investor side, they can basically isolate the collateral inside their wallet and then receive the lending facility and then trade on exchanges, again, without having to take counterparty risk. So it creates a much evolved nature of what we actually do and provide more and more prime brokers, such as not only your crypto natives, but your traditional banks to come in and continue servicing their hedge fund clients and other institutional investors.
Okay, thanks. And briefly, what are your main type of clients?
Yeah, so basically we have about 60% of our clients being institutional investors, whether they be crypto native or traditional. In this sense, I mean like hedge funds and asset managers. About 20% of our clients are market makers, prop shops, again, crypto native, traditional included. And then the last 20% are platform companies like Fintech, companies that offer digital wallets, neobanks, banking services. They could be exchanges and so on.
Interesting. All right, so I guess like one last question, and we may have time for one question from the audience, mindful of lunch. I guess like wrapping up on regulations. So there were panels before around the topic. Custody regulations seem to have like taken a bit longer to be firmed up. I'm not sure why. Maybe you can actually explain. And I'm also interested to understand like what you're seeing happening in the industry around jurisdictions for custody. Do you think it's going the right way? And if not, why? Okay, you want to start?
I could only comment when what I see. So I head the APAC region, so I can see certain Asian countries providing licenses. So one example is Thailand, which recently started their crypto custody license. So they require exchanges to leave 90% in cold custody with a third-party custodian, and then the 10% they can leave in their hot wallets that are managed by themselves. I'm not going to judge if that's the right balance or not, but I feel like it is a right step to providing safe custody for their clients' assets, having a third-party custodian. And the custodians themselves need to have a certain technology. They need to be in a certain jurisdiction, et cetera, or a certain regulated entity so that they can provide this 90% cold wallet solution to their clients. So I think that this is the first step, and then we're starting to see other countries like Indonesia starting meddling around with this. I'm hearing about Australia walking towards this step as well. So I generally think that the larger countries, like whether it be the U.S. and countries in Europe or elsewhere, they have a lot more stakeholders to get involved with to kind of roll this regulation. But if you're in Thailand or countries much smaller than that, it's much easier because you have less stakeholders. So I think we can use these countries as examples to how to roll out in other developed nations.
Interesting. And maybe Irfan and Dan, since you're coming from institutional custodians, you already have like tons of licenses, right? I'm sure, and huge regulatory teams. Like, tell us more about like what those guys are telling you about like applying for licenses, and what are the challenges you're facing?
Maybe I can start. I'll try. It does work. It's just me. So I guess from a licensing perspective, there's been lots of licensing frameworks that have been stood up. Some of them have been kind of, I guess, integrated into current licensing frameworks and regimes. So say, for instance, in Japan, they've got two regulatory frameworks. One is the Financial Instruments and Exchanges Act, and the other is the Payment Services Act, in which previously there was a self-regulating licensing regime there, whereby exchanges were permitted to be able to provide services for virtual currencies. then changed that to virtual assets, which of course means that tax and operational implications would have to change. Of course, I love that kind of stuff because I'm a geek, but all of that type of stuff has to change over, whereas other jurisdictions have taken a different approach and stood up completely different regulatory frameworks in order to be able to encompass what they deem to be a wholly new asset class, and therefore the requirements would be, from a regulatory perspective, to have different regulatory frameworks stood up. And then you've got the marriage of the two, whereby you've got authorities and regulatory regimes in traditional jurisdictions such as Australia, which have come out with a number of consultation papers in order to be able to further augment their current regulatory frameworks and gone out to the industry at large to be able to understand whether this is going to be palatable, workable, practical, pragmatic, all of the above. So I think that's as much as I want to talk about regulation. I think there's going to be lots and lots of talk on regulation, which will bore you to the back teeth. But I'll hand over to Dan.
Thanks for that. I'll take a slightly different angle on it then, just on that basis. The custody, which is the topic of this panel, obviously licensing is key. I mean, that's going to work itself out. The jurisdictions will find their right place and balance and so forth. And again, by asset classes, it will be different. The other thing I'll introduce into that regulatory kind of dialogue, obviously MiCA has been one of those at the forefront, and we've been pretty heavy in the advocacy with that, just around treatment recoverability, a lot of the traditional finance terms, and just actually getting clarity and definitions defined. The other thing that's a bit of an education curve, and the regulators having to go through that journey, is actually operating in the ecosystems, in the blockchain ecosystems. So forget the actual functions you're performing, but how do you exist in those arenas? So running on a blockchain, running nodes, interacting with those nodes, which are essentially technical services, and they don't have a home in current regulation much of the time. So again, we've been on a journey of education, a voyage of discovery, let's call it. A longer one than we'd hope in some aspects, but these are things that are necessary to be able to build those foundational components for all of us to be able to exist and coexist between the digital ecosystems and the traditional ones.
Thanks.
And maybe just a final thought, actually, as well. Sorry, but there have been digital custodians that have been granted licenses here in Singapore as well. In fact, we're very fortunate to have Tahina from Propine here, who graduated from the regulatory sandbox. Again, a regime that's put in place in order to be able to establish institutional grade players in the future. And they've gone through the licensing regime. They've worked with the regulatory authorities. I think both parts have educated one another in terms of that aspect. And I think that's been incredibly important, that institutional grade partnership and lobbying, but also fintechs working with regulatory authorities and sharing their expertise. And again, you introduced us as subject matter experts, but I'm a subject matter student. I'm still learning.
As we all are.
Yeah.
All right, we don't have time for questions, but we'll be hanging out at the lunch venue, so feel free to come to us and continue the discussion. So thank you very much, guys, for your attendance and for your listening. Thank you.